Guys, welcome to this week's stock market recap. I'm Robert Montes with Link Financial Advisory. Today we're going to be covering what helped the market, what hurt the market, and your key takeaways for the week of June 27th through July 4th, 2025. So first off, let's go through our recap. A phenomenal week. We saw both the S&P 500 as well as the Nasdaq finish up with record highs. The S&P was up 1.7%, the Nasdaq was up 1.6%. We also saw the Dow hit its highest level since February, finishing up 2.3% for the week. So really good stuff there. What caused the market to be up? Very strong reports from the Department of Labor when it comes to new jobs created. We saw 147,000 new jobs created last month, which was higher than the anticipated 118,000 jobs. We also saw unemployment dip to 4.1%. This was better than the anticipated 4.3% that we were expecting. And we saw month over month wages up. It was small, only 0.1%, but hey, we'll take what we can get. Making more money, lower unemployment, those are all good things. We also saw the trade deal between Vietnam and the United States get settled. So those tariffs have been settled at 20%. They're down from 46% is what it was for Vietnam. So that's good news. It gives people an idea of what to expect moving forward as far as international trade between our two countries, and now business can move forward as usual. As far as what hurt the market, not a whole lot of things, but there were some headwinds. One was bonds. We did see bond prices finish down, I believe, 0.3%. But this also coincides with the fact that bond yields were up 0.1%. So as you may know, when yields go up on bonds, prices tend to go down. It's just a little bit of give and take. Another thing that we're paying attention that has the potential to hurt the market is the trade negotiations between China and the United States. Those are set to close here, I believe, on the 9th, which is the end of the 90 days. There's not a whole lot of details out there, but it has appeared that they're moving in the right direction. So fingers crossed, we're going to be paying attention to that. And then we saw oil prices finish up 2.3% last week. That is good for energy stocks, so it's a good thing there, but it does detract from other sectors because obviously higher energy costs means it costs more to produce things, it costs more to ship things, so it's something to pay attention to. Key takeaways, things we're paying attention to, and maybe you might want to watch as well, is again going to be economic indicators. So pay attention to jobs growth, unemployment is important, month over month wages I talked about, those are all important things. Also want to pay attention to trade deals. Like I said, the one coming up between China and the United States, that's a big one. So keep an eye out for that. Remain diversified. I say this every week. It's so important, guys. Review your holdings. Make sure you're not putting your proverbial eggs all in one basket. And then last but not least is maintain a long-term perspective. Guys, if you would like some help or you'd like to reach out and talk with an advisory team, we're here for you. Happy to be a resource. We've got some great stuff we'd love to share with you. Let me know if I missed anything in the comments. Please hit that like button. Consider sharing this, and we'll see you next week. Thank you so much, guys.